Hey guys, how we doing? What's up? It's the Sherpa. It's Chase at Ever Bullish. It's Monday, the 27th of September. Surviving September, did we? Kind of, not really. I didn't. I took a couple licks, and I know some of you guys did too. So first off, sorry for that. Second of all, let's get back on the horse. Quarterback mentality, short memory. Here's the Monday game plan. You guys ready for a Monday game plan? I think this is going to be a good one. And I want to get your attention. So the word that I'm going to have to use is strippers. What do the strippers, ATM, and the feds have in common? ATM, strippers, and the Fed. Do I have your attention now? All right. I'm glad I do. Let's do it. Let's get straight to it. Let's go to the Sherpa's Monday game plan, September 27th. I'm going to share my screen here. We're going to go everbullish.com here. And let's get right to it. All right, everbullish.com, your go-to resource, the best newsletter on the internet, the best place for investors to come to find out how the professionals are trading, and most importantly, the place to come to for the Monday game plan. So I mentioned strippers, right? I mentioned the Fed, right? I got your attention, right? The Monday game plan is going to be strippers and the Fed. Crypto, oil-filled, full, as they say in Houston, Texas, where a lot of my boys are at. What's up? Shout out Houston, Texas, and the banks. All right, here we go. Good morning, Bulls. The Sherpa's here, and we survived September, or did we? This has been the worst month of my trading of this year, and I certainly underestimated the Fed's desire to accommodate easy money. Rule number one of the Ever Bullish mission. I published my Ever Bullish trading rules about 8 months ago. No one downloaded it. No one bought it. I'll repost them here in a second. But here we are. Do not fight the Fed. Please note this analogy below. Anybody that needs to learn a lesson, anybody that likes analogies, I'm going to try to make this one fun and funny, but this is the God's honest truth. The way to explain federal tapering, that is, the Fed's tapering, is think of the market as a stripper or a dancer if you're a conservative person. So the market is the stripper. She's taking the money. She's going to dance as long as the money's there, right? And Jay Powell is the businessman. I had Chinese businessman in there, but in today's cultural climate, it's just going to be Jay Powell as the businessman. So the market is the stripper. Jay Powell is the businessman. The Fed's balance sheet is the company card. In this case, I got an Amazon Black Card, and I got your name on it here because that's where we're getting to when you follow the Sherpa trading. In this case, it's Jay Powell, the businessman's Black Card, and he's pulling it out for the stripper, right? We've been pulling out the Black Card for the dancing stripper that is the stock market since 2011. Really since 2009. But we've been talking about going to the ATM for the past 5 years, and we haven't stopped going to the ATM. We know what happens when you're in a strip club, right? This isn't coming from me. I would never know. But the rule is don't bring the plastic. If you do bring the plastic, don't go to the ATM. If you go to the ATM, don't go 3 times, because what happens when you go 3 times? First of all, he's just making it rain with the full faith and credit of the U.S. government as collateral. And once you go to the ATM for the 3rd time, you can't take out any more withdrawals, right? You have insufficient funds available. That's what it means when we talk about the taper, guys. The taper is we're going to have to stop pulling out. And in this case, we're only going to go from $80 billion to $40 billion worth of bond purchasing. But in this case, it fits with the analogy. So you're welcome on this one. I got your attention with the strippers. We've had an analogy of exactly how the market is moving and going and why and what a taper is. So that's the Sherpa style. I hope you like it. Okay, this is going to be me here in a second, but I want to make this video first. This is the cover of the journal. I've been told by you guys that you like these to be quicker. I don't see anything on the cover of the journal except for a little bit about U.S. dominating the Ryder Cup. Shout out Ryder Cup. Way to go, boys. I loved it. So we mentioned before, stocks famously perform very bad in September, but that may not necessarily be the case this year. It wasn't the case this year. I put up a cool stat on here about how the S&P in up years, even though on average over the history of the market, the S&P is down for the month of September. But in years where it had led up and been up, it finished up, and it did that again this year. I was wrong. Currently, here's what's going on for me. Currently, I'm concerned with the end of the year sell to cash. This is a thing that hedge fund managers do, mutual fund managers do, private SMA managers do, and a lot of newsletter investors, but not the Sherpa. They go, okay, well, like right now, I'm beating the market by 34%, or at 34% in the Ever Bullish All Stock portfolio, including the sellout last week. And the market's up 17-something% over the same period of time. It'd be really easy for me to not just buy the market, buy the S&P 500 for the rest of the year, and just coast into that locked-in gain that I have, right? I'm not doing that, but a lot of institutional money is, and that always scares me late in the year. If you've already got outperformance, what's your incentive to continue to outperform when your bonus is coming up here in 3 months from the big dogs over at Fidelity, T. Rowe, the Merrill guys, the Goldman guys, right? So that's one concern. That's a lesson for you. The second one is China. I don't invest in Chinese stocks. Y'all know I stay away from Chinese stocks. This is essentially what's going on with this Evergrande, whatever you want to call it. I'm in Texas, so it's Evergrande, is that it's similar to the nationwide mortgage fiasco that happened in 2008. And it's similar to the default in the credit markets of the second largest economy in the world, which is China. Actually the largest economy, but they're not really, I don't even consider it an economy because they're kind of capitalist, they're kind of not. The point is here is that default is a worry. They did miss their bond payments. It's not a good situation, but I'm not invested in that, so it's the ancillary trickle-down effect. The easy money, again, the market has been playing contrarian all year. I decided to go with the playbook and this month and not expect the market to continue to keep going to the ATM, so to speak. And they went back to the ATM again, and they pushed off the taper until next year, and they put a bunch of flowery language around the taper. So this is like telling your drunk buddy at the strip club, you're saying, hey, Jay Powell, man, you're going to run out of money soon. And he's like, well, I'm just going to keep going back to that ATM with my black card until my third try, and it blocks me out. I get insufficient funds. And then everybody's upset. The stripper goes home, the market, the businessman goes home not feeling great about himself. And the analogy continues. So straight up, here's the game plan this week, boys and girls and bulls. The game plan this week is simple. We're going to double Ethereum, Bitcoin, and Bitcoin Cash. These are the ETFs, the grayscale ETFs here. I also love DraftKings this week. Straight up, stone cold, lead pipe lock, top shelf, top notch, grade A, primo beer bets on big oil and small oil. So these are the big oil and small oil names that I like this week. I also have Laser in there. I also have Plug Power in there. I also have Lending Club in there. And remember the Grayscale Bitcoin Cash Trust. I believe this is a great buy right now. These are the gambling stocks. This is a repost. I've got some information on the sectors here. This was actually from earlier today. Energy, utilities up, communication services, healthcare down. I still own a position in LabD. Now, you know what? I got out of that earlier this morning. I do not own a position in LabD anymore. I don't really like anything that's on the earnings calendar, but go visit the website, everbullish.com, click on the stripper article, and you'll be able to follow along with this as well, guys. Currently holding one option. I'm about to buy some more. So, no, I take that back. I do still have the LabD. I sold out of the Mara option, and now I'm regretting it. Sorry about that, guys. I took that back. I do love LabU long term, but I have a bearish outlook on it this and next week. LabD is the inverse. I have an October 15 option on that. So full transparency, that's what I'm holding right now. You guys can follow if you want. Then we have the oil markets, right? Oil was up over 75. This is so bullish. And I'd like to remind you that I called this. Go to my website also. Go download the Sherpa's lesson. I really want to help you guys. I put that on there for you guys. I didn't get any views on that thing. I'd love to get some views on that thing. It's also on YouTube if you're watching this on YouTube. And another repost. If you want to beat the market this month, what do you do? You want to beat the market this year, rest of the year, what do? You can forget everything I've told you and just buy Ethereum. Here at Ever Bullish, we have a little bit of a different strategy. I tell you how it is. I tell you what I think. I give you opinions. I'm accountable to those opinions. I'm also available. I give you my text and phone number, personal phone number, as well as email. If you buy one of my portfolios, they're $100. They're beating the living shit out of the market, and they actually have some thought behind them. Unlike most mutual funds, there is no bureaucracy. You're holding individual positions. You can set limits underneath them. You can also buy merch to support this. And finally, giving it some juice, baby. The bonus content is, this is the best option here. This is a MARA, M-A-R-A, a MARA option, $35 call. This is the one I'm about to pick up. This is the December 17th, so we're giving ourselves some time. If Bitcoin continues, if Ethereum continues, if Bitcoin Cash continues, if a lot of these other cryptos that run off of Ether continue, we're going to be able to make some serious cash in these. That's the best option. Go ahead and buy that one, count it, and always follow along in real time with me. I am Chase. I am the Stock Sherpa. I am ever bullish. I am very bullish on the aforementioned stocks. Starting the podcast videos back up. Go ahead and get this, the Ever Bullish One podcast on all podcatchers. Shout out Ivy.fm, doing great things. That's an app that my sister owns, and I'm an interested party. And I'd love for everybody to go check that out. They're about to do major things as well. Download that app. You can search for any and every fund manager and every discussion that they've had and dig deep into some of their podcasts and find out how they decide to trade, so you can get the best info, the best content. And remember, the market is the stripper. The Fed is the businessman. The U.S. full faith and credit is backing it as the ATM. And at one point, the ATM is going to run out. I'm a little bit iffy on what's going to happen this week. But the number one rule here at everbullish.com is that you do not fight the Fed. So go ahead and get that money. Chase Everbullish, AFG, LFG, LGR. Let's get rich. Thank you for following. Please tell a friend, a stranger, your family, a neighbor. Go buy the Everbullish portfolios on my website. You won't regret it.